Hey VV Nation, I'm Glenn.
And I'm Ryan. We've got a special event coming next month, May 1st. We're finally hitting the road. Now, we will be hosting some live streams. Tell them a little bit about the live streams we'll be doing.
We're going to have the Stock Analysis Power Hour. Ryan will host that. Bring your stocks. Let Ryan break them down for you. I'll also do a live stream called Trending Thursday. That's where we go through, look at what's going on in the market, what's going on in the news, and we analyze stocks. We also have a live presentation for those people who will be attending live as well. What's that, Ryan?
Now, we do have the presentation titled Unlocking the Secrets of Financial Success. Now, to register for free and get the details, just go to vectorvest.com/roadshow.
Well, good day, everybody, and welcome to the VectorVest International User Group Forum. I'd like to welcome everybody into the room. It is Saturday, April 5th, 2025. Glad to see, well, we've had quite the movement in the markets. We'll be talking about all that. But folks, as everybody knows, this is broadcast live on the VectorVest YouTube channel. So please make sure your speakers are turned on so you can hear the audio portions. And a recording for this webinar will be available shortly after it completes on that same VectorVest YouTube channel. All right, so welcome everybody. Let's see who we have out there. I see Stone talking about, I guess, storm damage from last fall. So yeah, our thoughts are with all those folks still, and I can remember when we were in Tampa back in January, walking around the Tampa area and still seeing a lot of the damage in that area. All right, hey Stuart, good to see you. There's Stuart from Calgary, Blaine from Cancun, Mexico, showing us how international this international forum actually is. We've got Norman from Boston, Eric, Raphael from Calgary as well. There's RC Texas from Austin, Brett from Abu Dhabi. There's David. So there, I see East Tennessee in there, Bill as well. Peter from Belgium, Michael from South Carolina. We've got Knoxville, Tennessee with Chuck, Chattanooga, Stephen. Hey, Cheryl. There's Tony from the Ottawa area. All right, so far too many. We've got Burlington. I'll just start mentioning some places. So we've got Gert, Belgium. It looks like Pay, Belgium. Burlington. We've got Quebec in there, California, Netherlands. Northern Ontario there, Tim. All right, Alpha, St. Louis, Missouri. Fred from Barrie. So, folks, truly an international forum. We have a lot of stuff to cover. I'd like to be able to acknowledge everybody in there, but there are a lot of you and from all over the place. So, great to see that. Always great to see how widespread the VectorVest family is across the globe. And this is our opportunity every month to try to bring everybody together. All right, so let's start advancing our slides here. As everybody knows, there is risk in investing. So everything you will see and hear today is provided for educational purposes only and should never be considered as investment advice. The information is designed to empower you to make your own investment decisions, and these decisions are yours and yours alone to make. All right, so we have the risk disclaimer out of the way. Let's look at the agenda for today. Once again, pleased to be the host for everybody. We'll be covering the global market review, as we always do in the International Forum. And then we have a segment on trade ideas, which will be a bit different than typical with everything going on. And then I am pleased to be joined by none other than Mr. Todd Shaffer, Manager of Research here at VectorVest. His keynote presentation will be entitled Measuring Change for Better Decisions. So Todd, if you want to jump in and say a few words. of
Well, my
wisdom.
few words would be, good morning, everyone. Welcome to the session.
All
And
right.
oh, by the way, I saw somebody in here from Grand Rapids, Michigan, as a former Meyer Thrifty Acres employee. Shout out to Grand Rapids. Little inside knowledge there.
Oh, there you go. All right, and there again, you can see, so we look to adjourn around 12:30, and you can see once again, the replay will be available on the YouTube channel immediately after the webinar. All right, so let's jump right in. Let's get into the global market review. As we know, we've been seeing some very active markets of late. So let's jump right into the slides here and see where everything is at. Okay, we're going to start with Canada here. Here's the color guard. So you can see, looking at that about 2.5 time frame there, we've come from yellows, confirmed green lights, right into reds in the price column. Actually, on the 28th of March, there were 3 reds right across the board. And then you can see a little back and forth with yellows, another green light in the price column. 2 red lights, RT and BSR column on the 3rd, and then you can see on the 4th, 3 red lights across the board. And now we're looking at a confirmed red light in the price column. With what's going on in the market, what's everybody going to be interested in? Are we getting near a bottom fishing? Well, if we look at the BSR in Canada, we went from, it looks like in this period, we were a high of 0.51 at one point. Look at how quickly, and that 0.51 was as recent as 25 March. Look how quickly we've gone to 0.07. 007 there, Todd, for Canada, the James Bond BSR. So very quickly, so obviously down and well below the 0.20 and below level, where we start letting people know that the market may be searching for a bottom, and upside potential may outweigh downside risk. Now, not to say the market can't keep going down, but once we get down to oversold levels, very oversold levels, we'll start messaging or giving that message. All right, but they can stay down for quite some time, and 0.07 isn't the lowest the BSR can go. You can see the MTI got down from 0.73 to 0.60, right at the bottoming levels for the MTI, 0.60 and below for the MTI. Now, the BSR is the required one. The MTI is just added benefit, and if we go further below 0.60, could tell us that we could see a potentially more powerful uptrend or blast off from the bottom. All right, but we have to remain patient. You can see Canada in the down there, and if we look at year to date, well, we're seeing red, and we're going to see a lot of red. So year to date, minus 6.45 for the Canadian VectorVest composite. And there you can see a summary of our proprietary market timing signals. Confirmed calls went down on the 3rd of March of this year. The DEW on the 27th of February. Green light buyer on the 3rd of April. So it went neutral on the 3rd of April. Primary wave down on that same day, 3rd of April. All right, let's jump into the US next. There you can see the US year to date down 11.37. And here's what the color guard is looking at there. You can see both countries, 3 ticks into the red, both countries, same guidance. Color guard is bearish. VectorVest does not advocate buying any stocks at this time. And then you can see as well on Friday, 3 red lights across the board, confirmed red light on the US side as well. And you can see on the US side, BSR has come from a high of 0.39 in this period, all the way down to 0.05 very quickly. And then you can see that the MTI has already joined the bottom fishing club here, or the market searching for a bottom. And very quickly in 3 sessions, we went from 0.69 down to 0.58 down to 0.46 on Friday. All right, you can see the down situation there too, short-term downtrend and an underlying downtrend. And here's the summary of the market timing signals there. So the confirmed calls in the US have been down since the 10th of December. All right, you can see the DEW turned down on the 21st of February of this year. Green light buyer went neutral on the 25th of March, and the primary wave turned down last on the 28th of March. All right, here is a roundup for March of all the countries. You can see Canada down 3.12%, US 2.60%, Australia 3.56%, and the EU, who had been the one outperforming, you can see actually down the most in March, down 4.26%. And there you can see the year-to-date numbers as well. All right, let's jump right into Australia next. All right, so Australia down 5.52% year to date. You can see exact same color guard, needle position and guidance, and the exact same thing. 3 red lights across the top of the color guard. RT kicker confirmed. Red light as well. You can see their BSR coming down from a high of 0.33 in that time frame down to 0.12, so in bottoming levels here as well. The MTI hasn't quite made it to that yet. They're at 0.67. All right, but getting close and getting close fairly quickly. You can see the down situation there as well. And if we run through the market timing signals, you can see the confirmed calls turned down in Australia on the 28th of February. The DEW turned down on the 24th of February. Green light buyer went neutral on the 27th of March. And the primary wave turned down on the 27th of March in Australia. All right, that leaves us with the European Union. And there you can see their color guard. So year to date, down 6.88%. And we are looking at the same thing across the board here, folks. Market timing gauge needle there, 3 ticks into the red as well. Exact same guidance. VectorVest not advocating buying any stocks in any of the VectorVest countries. 3 red lights across the top, of course, and the RT kicker combo confirmed red light there for 3 sessions in a row. You can see the BSR down to 0.13. So into the bottoming levels there. The MTI still up there at 0.73, so it would still have a ways to go to get to the 0.60 and below level to join in with the BSR there. Not sure if we'll get to that point, but we'll see how things play out. All right, so down situations everywhere across the board. And if we review the market timing signals there, you can see the confirmed calls went down very recent, just on the 2nd of April. The DEW turned down on the 4th of March. Green light buyer went neutral on the 3rd of April, and the primary wave turned down on the 26th of March. All right, so that's a quick review of the color guards. Let's jump into the market timing graph. So here, looking at Canada, you can see where we have support and resistance on here. I've got my own line in here, basically the bottom of this consolidation channel here, and you can see price action on Friday did close right within that zone. This is going to be an important level. We're going to need to see whether that's going to hold when we get back into trading on Monday of this week. All right, if that doesn't hold, we've got another level down here. You can see right in around the $29 level. All right, the other thing to note is we were kind of, I'll get into that later, but you can see with our proprietary market timing indicators, you can see the MTI, the BSR, and the RT all putting in new lows for the year. All right, and you'll see that common thread throughout here as well. And one additional piece, just putting in the confirm call here, folks, to let everybody know when the VectorVest confirm call came in each nation, basically telling us that, you know, we should have been getting defensive before that point. But of course, the confirmed call, the last one to go down, that if you haven't got defensive, you really need to be ensure that you're defending your portfolio at that point. You can see where that came in the Canadian market. Let's go to the US next. So here you can see the US. Interesting with the default settings of the support and resistance indicator, you can see Friday's candle actually came through 2 levels of support. So you can see one here, and the next level of support they actually have right at the wick. Now I did put another level down here that you can't see on this graph, but it goes to a significant level. So that one just below the line, the low marker there. All right, but you can see the MTI buy to sell ratio RT there, putting in new 52-week lows on the US side as well. And here you can see where the confirmed call came in way back on the 10th of December, as we mentioned. All right, again, really good position to help protect portfolios. All right, looking at Australia next. Here you can see where price action is hanging out there, and you can see the wick from Friday came in and came right down to the line on this support level here. All right, so you can see that'll be an important level for Australia come Monday. Of course, they'll get things kicked off well before the rest of us. All right, and you can see if that doesn't hold, there is another level right down here. You can also see the resistance levels there as well. Now, a little bit of a difference here in Australia. It looks like the MTI very close to getting past this low here. All right, it looks like the buy to sell ratio has, as has the RT. All right. Here is the European Union. Whoops, sorry. This is Australia confirm call. So you can see where the Australian confirm call came in right here on the graph. All right. And here's the European Union. So here you can see once again how quickly these markets have cut through levels of support. So in the 2 days here, we've come right through this level of support, this level of support. I do have a level down here that matches up fairly well with some consolidation further back. So that would be a key level here to keep an eye on. You can see the low, the wick of this candle actually came down and touched this level. All right, so it was significant in the past back this way and came into play here already back in August of 2024. All right, and if we look, you can see we were mentioning that the European Union over the last few international forums was the outperformer. You can see that the confirmed call just came in right in here if we look at it on the graph. All right, and you can see all of their indicators here as well, putting in, so it looks like the MTI for sure, buy to sell ratio getting close to putting in a 52-week low, but RT definitely has got there. All right, so that is all of the nation's color guards and market timing graphs. Let's move on to the global market tracking ETFs. February, you can see from the last international forum on the left. Looking at March, you can see Who's leading the way here? So the top 5 being Poland, Greece, South Africa, Brazil, Peru. All right. And you can see out of the 43 for March, there were 25 winners, 18 losers. As a basket, they had a 0.56% gain, outperforming the BBC that was down 4.44%. You'll also see at the bottom, so I'm looking and you can see India in there, Spain, the Philippines, Chile, and BIC, which is Brazil, India, China. And so it got me thinking, maybe we need to keep an eye and see if the better performing countries, because of the trade war that we seem to be in, if the better performing countries end up being countries not as dependent on the developed nations per se, US, etc. Because if you look at that list, you'll start seeing a lot of those in there. All right, so we'll see how that plays out if the situation does, if the current situation does continue. All right, so that was March. If we jump into the next slide, so we've just moved March over to the left, and then we take a look at 2025 year to date. So you can see we go from, out of our 43, 25 winners and 18 losers year to date. We're looking at red there with 17 winners, 26 losers. As a basket, you're looking at a loss of 1.89% versus the VectorVest composite over that same time frame, down 11.37%. All right, and you can see the top 5 there, very close. So Poland, Spain, Chile, Greece, and Brazil are rounding out the top 5. So we do have some repeats in there, and you can see Poland has kept that top position overall. All right, next we're going to go to the sector ETFs. All right, so both the global ETFs and the sector ETFs are in the US software, both of them in the watch list viewer under cherry picking. All right, so you can see that there. So sectors 2025 year to date. Well, is it any surprise? We can see gold, even though gold has been beat up the last couple of days, still holding number 1. Gold had quite a run, all right, but has started pulling back fairly quickly. I'll kind of give the same warning here that I give in the weekly market update and have for the last few weeks. Keep an eye, and you can see why in the last 2 days. So I was saying, keep an eye on your gold positions. It's always great when they're doing good, and it's great when they do good and the market isn't. But if we get into a significant downturn, you will see, possibly this happened in 2020 with the COVID downturn, probably about 1/4% of the way down, 1/3%. Gold was actually performing well, was still moving up, but when gold joined the sell-off, it moves very quickly, and your gains can be stripped away in lightning speed. So, and you know, that goes for gold and pretty much any commodity. All right, but you can see sectors, gold leading the way there, followed by consumer staples, utilities, healthcare, real estate, rounding out the top 5. But the thing to see, look at that, 30, so there's 30 sector ETFs. There's only 1 winner year to date, that being gold, all the rest, 29 losers. As a basket, down 11.46%, and you can see, so lost a bit more, pretty much in line, but a bit more than the VectorVest composite overall. And I thought the 10-day was going to be pretty interesting to see what's going on there and whether we had any gainers with what's happening with tariffs, etc. But you can see 10-day, everybody in the negative, So all we're looking at is the best of the losers, I guess. And you can see consumer staples, food and beverage, U.S. home builders, utilities, rounding out the top there, and consumer staples performing the best with only a 1.10% loss in that time period. All right, so that rounds out both the global and the market sector ETFs for the US software. That brings us to central bank rate announcements. So we did see in March a little bit of a mix. European Union and Bank of Canada lowered interest rates. Japan, US, England, and Australia all held. All right, so March is behind us. That brings us to April. So April dates that we're going to be paying attention to start on the 9th with the FOMC meeting minutes out of the US. All right, then you can see April 16th, we'll have another Bank of Canada interest rate decision. The European Union goes the next day on the 17th. And Japan would be the other one of major interest on the 30th of April. All right, so those are the central bank rate announcements looking forward. Keep those dates. We don't have the US going this month. They'd be the main mover, but we have seen definitely Japan can play a role in here. All right, essays from around the VectorVest world. Another great week of essays here, folks. And I'm going to be talking about one of the recent essays as soon as we hit the trade ideas section. But you can see a quick roundup here. Out of the US, Angela Akers wrote an essay entitled Build a Tariff-Resistant Portfolio. So very timely again there. So how to use VectorVest to be ready to build a tariff-resistant portfolio, because we might not be ready yet. Out of Canada, Don Reitzma wrote an essay entitled Using the Derby to Get Out in Front of the Field, how to use the VectorVest Derby to get a leg or hoof, right, Todd, up in your trading arsenal. European Union, Susan Hayes Colleton wrote one entitled How Do Our Subscribers Outperform the S&P 500? So interesting essay there, looking back at their 2024 VectorVest workshop competition that they hold there, and how many were able to outperform the S&P 500 using VectorVest. Then out of Australia, we've got Robert and Russell Markham writing an essay entitled How VST Gold Stocks, or High VST Gold Stocks Surging. So we do know that situation changed pretty rapidly in the last 2 days. But how to use VectorVest to analyze the top performing industries and sectors to identify those on the move, like when they wrote this essay, materials, gold, moving in the Australian market. All right, so early in the weekend still, folks. So if you haven't had a chance to go and read the essays at this point, there you've got a quick summary. Ensure you get in there, and any of the ones that look like they interest you, log into that nation's software. Normal login, just choose that nation's flag, log in as you normally would, and then go to the Views tab and look for last Friday's views. All right, so that's the essays. Earnings update. So we're still kind of winding down an earnings season, haven't started the next one yet, but estimated earnings growth for the S&P 500 Q1 2025 earnings is 7%. Last week it was 7.3%. So we're seeing a little bit of a down wave here. Oh, I didn't realize that that was actually in the writing, but there you go. So we'll see how that continues to play out as we get closer to the next earnings season, and we'll see how earnings come through once we're in there. All right, so that's the earnings update from Angela's essay as well. All right, so that brings us into trade ideas. Now, we're we know what's happened the last couple of days in the market. We've seen it on the color guard. We've seen it on the market timing graphs. I forgot to say to Todd at the beginning, I was going to say, look at my graph, something's wrong. It looks like somebody took a fat red marker and just drew a vertical line down on some of them, because that's kind of what we are looking at. We're looking at a pretty good steep cliff. So first thing we're going to touch on here, I want to go back to Angela's essay from last week, which was entitled Follow Through, and the importance of follow through. Hopefully everybody is always looking for follow through in any of their trades, no matter which way you're taking the trade. But this was an excellent essay, and there just happened to be a real good example of why follow through is so important right after she wrote this essay. So I'm going to jump into the next slide here. I should have put the flag on there. This happens to be Canada. It happens to be where the best scenario kind of played out. The US market did play out very close to this, but you'll see there's a few differences. All right, so the setup here is we're looking at the 28th of March. All right, so we can see in the Canadian market here, we can see how important the 65-day moving average is. When we're above the 65-day, as we were here, and the market's moving up, what we're looking for when the market does pull back, and this is the same for any moving average, any support and resistance line, we're looking to see whether we're going to get support. And in this case, with the 65-day moving average in Canada, you can see that market did consolidate there and did test our moving average before finally breaking down. Once we get to the south side of the moving average, now we've got a different scenario where you can see we got the pullback, we got the low right back here, and then we ended up with an uptrend. All right, so we ended up with a bullish candlestick pattern there. We ended up with an uptrend. Now we're looking at the moving average as resistance, and we're waiting to see if we're going to be able to break through and hopefully get follow through. Right? Typically, when I'm trading, I'm looking for the break, but I'm not trading the break. I'm looking for the follow through, and depending on other situations, whether it's one day follow through or multiple day. Here in this case, you can see price action respected the 65-day, unfortunately, and was pushed back from it. All right, so this is kind of the setup here, and let's just advance a day. Oh, first I should say too, so we do have a trend line, downtrend line established here. All right, so you can see that. All right, so the very next day, we end up getting a hammer candlestick. All right, so, and I can remember some of the trading rooms, etc. The discussion was, okay, is this going to be a reversal sign here? All right, and here you could see what we were possibly setting up. So we've got our hammer. If the market does reverse from here, you can see that we could be starting another uptrend if we can maintain higher lows. All right, so if the market did keep bouncing from here, we're looking at possibly having higher lows set up. And you'll also note, if we look down here at the MTI, the buy to sell ratio, and the RT, we had the same scenario there, where if this market did bounce, we were also looking at higher lows on each of our proprietary market timing indicators. All right. So if we go ahead, oh, and then the other thing I should add in here too is the most aggressive traders, they're looking for the reversal candlestick. And you can see this Friday, so that was a week ago Friday, we had quite the red candle. So typically what you're going to want to see is price action for another level of confirmation beyond your bullish candlestick here. You're going to look for price to break past the midpoint of this red candle, which happened to be 31.85 on the Canadian market. All right, so now we take us ahead one day, and you can see with the setup there, you can see next day we did get confirmation of the hammer. All right, but you can see we're still not past the midpoint on this red candle. All right, you can see our downtrend line in there, which we'd also be keeping an eye on, as well as the 65-day moving average. Going the next day, and this is one of the reasons why I use Canada versus the US, because the US set up the same way here. All right, the difference being you can see, so here we get breakout past the midpoint of the red candle. All right, you can see we've come right up into the zone of the downtrend line, but you can also see what we got that the US, what Canada got that the US didn't get was the primary wave actually turned up. All right, so typically very aggressive traders in here, very aggressive traders using VectorVest indicators looking for the primary wave. Now we get the primary wave or any indicator. What are we always telling people to look out for? Just like Angela did in her essay a week ago, is follow through. All right, so we've got the primary wave, and you know, just for frame of reference here too, for me, primary wave, this candle came up against the downtrend line here. I would actually be looking for a candle to break that downtrend line, and then I would be looking for follow through from that point. All right. In this case, I would also be cognizant of the fact that I do have the 65-day moving average very close to price action here. All right. So let's advance one more day here. There's that primary wave. And boom. You can see what happened the very next day. No follow through at all. We ended up getting whipsawed with the primary wave. All right, so we got a primary wave down that very next day. There was no follow through at all. And because we were waiting for that follow through, ended up being kept out of what most likely would have been a fairly bad situation there. All right, so just wanted to show that example. I think it's an excellent example of looking for follow through. Now, as I said, typically for me, you know, you can see the downtrend line here. I would have been looking for a break of that and then confirmation of that. With how close it is to the 65, I would also be taking that into account. All right, so looks like some of my lines kind of got a little out of kilter there, but hopefully that was good to illustrate that point. All right, so wanted to add a few words of wisdom here, given the situation we're in. One of the biggest issues we'll have, and folks, none of us know what's going to happen this coming week. We don't know if we're going to get news over the weekend, catalyst all of a sudden turning the market around. We don't know if the market's going to keep moving to the downside. But when we do get into bottom fishing territory, when our indicators get down to bottoming levels, everybody's getting antsy, wants to know, you know, when the market's going to turn, when are we going to be able to jump back in? And it's patience is a virtue, always, always. And it's very easy to become impatient when we look at things. All right. So the first one we have here is when it's time to sell stocks, you won't want to, and maybe many of us were in that position in the last few months, looking at the indicators, knowing we need to get defensive, looking at good gains. All right. The second part is when it's time to buy stocks, you won't want to. All right. And I think everybody who knows the gentleman knows who this came from, none other than the late, great Dr. David Paul. And I want to key in because of where we are. I want to key in on the second one. When it's time to buy stocks, you won't want to. And there's a very good reason for that. We haven't really experienced, we don't know if this market will keep going down. We could experience much more downdraft than what we're seeing. We're seeing very bearish candles. I know on the Canadian side, there was a Maribozu on 2 sessions ago, very close to another one on Friday, which are very strong bearish signals. So typically, if this market keeps moving down, one of the things you're going to have to remain cognizant of and be careful of is short squeezes, where you'll see very quick moves to the upside, very quick abrupt moves to the outside as market makers look to shake people out of short positions. All right, so typically the more we get into a downturn, the more violent and more abrupt these upward moves are going to be. All right, so and when that happens, it never, words have never come more true. When it's time to buy stocks, you won't want to, because the markets will be so beat up, and some folks would have jumped in on what they thought were going to be market turning opportunities, only to see the market turn back around and put in new lows. All right, so very easy, if that ends up happening to you, to get very gun shy when the real opportunity comes around. All right, so make sure you're paying attention to VectorVest, paying attention to the signals, and hopefully we can avoid all that. All right, so I did want to make sure that we go over bottom fishing criteria given where we are. So market timing is paramount. And how do we identify potential market bottom? To start preparing for the blast off, well, we all know that the BSR, the buy to sell ratio, is critical, and it's the required piece of this. When it's down below 0.20, that's where we start looking, and the further it gets down below 0.20, if we look at the rubber band scenario, the further that rubber band starts getting pulled to the downside. All right, and then the MTI less than 0.60 isn't the required part, but if it does, if we do see both of those indicators get into their bottoming levels, and the further both of them get into those bottoming levels, then there is the stronger rebound potential there. All right. So just a quick review on the buy to sell ratio, the definition: ratio of buy to sell ratings of all stocks in the database for each country. All right, every country, every stock in the database is given a buy, hold, or sell rating on a daily basis. Purpose: it indicates the internal composition of the market, and its function signals the overall health of the market. Okay, and there again, the BSR, when it gets less than 0.20, market may be searching for a bottom, and you'll hear us say upside potential may outweigh further downside risk. And then here's just a quick review on the MTI. All right, combines the price of the VBC, RT, and BSR into that single comprehensive indicator, signals the underlying trend of the market. So when the MTI is greater than 1, you've got a market uptrend. The higher above 1 it is, the stronger the uptrend. When the MTI is below 1, you're looking at market downtrend, and the opposite is true. The further below 1, the stronger that downtrend. And there's the bottoming levels there, MTI below 0.60, market may be searching for the bottom, and once again, upside potential may outweigh further downside risk. All right. I had like another half hour at least of stuff to do, Todd, but I see that I'm right up against your time. So, with all that, I'm going to turn everything over to Todd, who's going to give us his keynote presentation entitled Measuring Change for Better Results or Better Decisions.
Well, the good news, I suppose, Rick, is that you have something to talk about next week.
Yeah, or next month, if the situation's still the same.
All right, so let's talk about measuring change for better decisions. And so the idea here is we can actually, and you saw that in Rick's presentation, right? We measure change often with our quick tests or with a delta measurement, basically looking for the change of speed of whatever indicator we're looking for. So as you know, our mantra is the VectorVest advocates buying safe, undervalued stocks that are rising in price when the market's rising, right? So we have a couple things going on here, right? Because not only are we looking for momentum, that we're looking for those rising price patterns, right? That's the momentum piece, but we also are looking for the broad market to be participating. And we're also looking for stocks that not only have that rising price pattern, but are also good fundamentally, right? So the same is the opposite is also true. We believe in selling unsafe, right? Weak, overvalued stocks that are falling in price in falling markets, right? It's just the opposite idea here. So this is momentum trading. And when you think about momentum, think about it in terms of acceleration. So if I had rising price, if that was the line graph of stock A, and this is the line graph of stock B, right? Stock B is accelerating faster than stock A and therefore has higher momentum. That's the idea, right? So VectorVest is all about putting probabilities on our side. So given stock A or B, the stock that's more likely to have that persistent trend to the upside is the one that has strong fundamentals. That's the biggest differentiator in terms of sustained trend over time. Of course, when we're playing the market to the downside and we're selling unsafe, overvalued stocks that are falling in a falling market, well, where's the fundamental link there, right? We're looking for weak stocks, so we don't have fundamental underpinnings. And so therefore, kind of by definition, we're looking at shorter time frames, right? You're not going to get typically sustained downtrends in bear markets because it's not a fundamentals play, it's a fear play, right? And the market tends to move faster with more volatility in down markets. So according to Investopedia, I was just thinking, how many presentations have I done that I don't have a definition? Anyway, though not the first momentum investor, Richard Dryhouse, according to them, is credited with taking the practice and making it into a strategy he used to run his funds. His philosophy was that more money could be made by buying high and selling higher, or selling low and buying back lower, rather than buying underpriced stocks and waiting for the market to revalue them. So instead of seeking out undervalued stocks, he focused on companies showing strong growth and rising price. And that's right in our bailiwick. So we've demonstrated over the years, hopefully to your satisfaction too, that if you couple the momentum trades with strong fundamentals, longer term trades can be supported. So momentum investors look to take advantage of investor herding, essentially, right? You have buyers piling into a trade, driving the price higher. So we do that by identifying current and developing leadership in the pack. So longer term investors can improve their entries using the same approach. And so we typically look to the industries and the sectors in those rising markets. as additional confirmation of the pack mentality, the herd chasing a particular market segment, and therefore the stocks in that market segment. So our go-to measurements for price momentum are RT, right, our trend indicator, and the quick test tool. Those are the ones you'll see us use most often. And it's simply, the quick test tool is simply measuring the change in price from point A to point B. And we express that in terms of a percentage change. RT, of course, is looking at the, not only that percentage change, but also the dynamics, the acceleration, et cetera, over multiple time frames. So that direction, magnitude, and dynamics of price, right, result in our RT score, and we can look to the change in RT to show whether or not that acceleration is improving or weakening. All right, so let's jump over to the stock viewer here. I'll jump into the program, and we've all seen our redness here. And so stock viewer, let's go to the stock viewer. So in stock viewer, here we're looking at all the stocks, and our default sort in stock viewer is by VST descending, right? So we're bringing the stocks to the top of the stack that have the strongest combination of value, safety, and timing. But when we are looking for industries and sectors, those segments, the broader segments, we then go to our default sort being by RT. So when RT is descending, here I have at the top of the list, the stocks that have the strongest upward price trend, as long as the RT score is above 1. And of course, the stocks with the lowest RT score are in the fastest acceleration to the downside. And you can see, in the market, as you might have suspected, we have 1, 2, those are flat. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 industries, one of which is contra ETFs. So 11 industries that are actually still hanging on to their upward price trend by the measure of RT. We can do the same thing if we look at sectors. Right here are the top sectors sorted by RT, and I'm at the top. And as Rick was showing a little bit earlier, there isn't anybody here in uptrend, right? The broad sector, the utility sector, is made up of several industries. So here are the industries within the utility sector. 2 of the 4 still hanging on to their gains. So what we can do is we can quick test all 40 sectors over the past week. So I've changed my date here, run the test, and you can see if we're sorted by annualized rate of return, but if I just sort by the percentage price change, and anybody enjoying the sunshine here, right, with the electronic sector feeling the most pain, down 14.5% over the past week. So that's kind of laying the foundation. And why do I care? Well, because if I can identify the industries and sectors that are either leading the field or moving up or strengthening their direction, I see I've got bearishness on the mind here. But if I can identify the industries and sectors that are moving and the direction they're moving, then so much the better. So let's demonstrate why it even matters. So I'm going to go back to the industry viewer. Mostly because I still have some industries that at least have RT values that are above 1. So even if I looked at contra ETFs, this would be true. But let's start with the dairy products industry. If I right click and look at the stocks that are in that industry group, as great as the market has been over the past couple of weeks, how many sell-rated stocks do you see in that industry? Well, there's only 3 stocks in the industry, and none of them are sell-rated. Right? And by the way, for those of you who are in Canada or overseas, you can get some really thin industries like the dairy products industry that only had 3 stocks. So if that's the case, you may prefer sector analysis to get more components. But if I go to the healthcare HMO industry, look at the stocks in that industry group. How many cell-rated stocks do you see? Even though the market has been, I'm going to go past Treasury. Let's go to food and meat products. We're still hanging into a slight uptrend here. You can play this game at home, but the key here is I do have 2 cell-rated stocks now that I got to my 1.09 RT. Right, but even so, just look at the number of stocks that are still hanging on to uptrend versus those that are in downtrend. Right, and of course, that balance will start tipping as you get into downtrending industries. But the key here is, remember, the industry of the sector is ultimately the average. These numbers are the average of all the stocks in that industry or sector. So we're identifying the sectors that still have players that are, in this case, hanging on in a downtrending market, or maybe even improving. Perish the thought, right? Because there is money, institutional money, that has to stay in the markets, and so they'll often move toward those defensive sectors. So that's the idea, though. If I flip this around just to nail my point, crypto stocks are getting hammered. It's the strongest downtrend of all the industries, of the 222 industries we have, right? So if I look at the stocks in the industry group, same question, but this time, how many buy-rated stocks do you see? Fiber optic telecom. How many buy-rated stocks? You get the point, right? So if I was looking for shorting candidates, does it not make sense that I would come to the poorest performing industries and sectors and look for shorting candidates that have low VST scores, right? Very weak fundamentals in strong downtrends. They're losing money and losing it at a faster clip. That's the kind of stock I want to short, particularly if it has a price that's not 33 cents, right? Particularly if I can get a price that is, something north of $5 or $10, so there's actually available inventory and room for it to fall. All right, but this is not a presentation about how to short. This is how to identify movements, how to measure them and identify the fastest movers in the direction we want to go. So this obviously has implications for if we continue to the downside, or if we do get this market bounce and get into some kind of a bottom fishing opportunity, I can identify the stocks that are in the industries and sectors coming off of those lows. So let's talk about following the herd with those industries and sectors. And I'm going to take a shot here at demonstrating an idea. I'm going to look at we already looked at the food dairy products industry, right? I'm going to grab a couple of these guys. And let's look at their graphs. Now look at the industry graph now, right? So this is the graph of the industry as if I was looking at the stock, right? But remember, this is the amalgamation of all those stocks. So what I'm looking for, if I'm bullish here, and I like to teach this from a bullish perspective because most of us don't short the market actually, and it's easier for people to keep things right side up in their minds, at least at the start here. So what we're looking for, rising price action, right? And if you have trouble identifying that, then you can put a short-term moving average on the price if you like. With accelerating industry RT, right? So the average price is gaining strength. And at the bottom here is a thing called RT ranking. So remember, we had 222 industries in the viewer. Actually, I'll just put that off to the side. So we're sorted by RT descending. So the rank of those industries, right? That's the top rated. second rated, third rated, fourth, fifth and sixth tied here on an RT basis, so it went to an alpha sort. But you get the idea, right? The lower the number, the higher the ranking, the higher its RT score will be. And you can go all the way to the bottom to find the 222nd ranked industry. Excuse me while I cough. All right, so when we look at the graph again, from a bullish perspective, what I'd really like to see is the industry price trend accelerating, RT accelerating, RT ranking accelerating, even though it's to a lower number, but it's improving, right? Conversely, if I was shorting, I'd like to see the mirror image. Can you envision what happens to an industry that was in uptrend that starts to weaken? RT is going to roll over. RT ranking is going to roll over, right? So on these momentum trades, one of the clues that the party's coming to an end is the slowdown or the reversal of those trends. All right, so that's kind of a fundamental concept to what we're trying to do here in terms of these measurements and identifying those stocks that are not only up, but are continuing to accelerate. Oh, one thing I wanted to talk about, I forgot, is as I look at that graph, go back to my leadership here. We talked about that trend breaking down, but recognize there's a couple ways I could identify that this industry is strengthening. If I did my quick test from point A to point B, I'm checking that the price has moved higher in that time frame, whatever that time frame is, right? It could be a week, it could be 3 months, it could be a year, right? So that's the quick test. I could do the same thing on RT, and I could do the same thing on RT ranking, although I'd be looking for the number to go down. So in theory, a decrease in the number, the nominal value, would show that same uptrend, that same acceleration. So that would be the delta measurement. What do we think about in terms of trend? Right? So here I'm still trending higher, price is still trending higher, but if I come down to that third industry, which I think was meat products, oops, I hit industry graph instead, I'll do better. Right? On a trend basis, see how I'm still higher than I was a month ago. I'll go to the month because it's easier to find the line, right? RT is still higher than it was a month ago. Price is still higher than it was a month ago. RT is still, the RT rank is still better than it was a month ago. I'm missing, by just looking at the change, I'm missing the change in trend, right? That it rolled over. So these two tools are very powerful in terms of just looking for something that's higher than it was in a certain time frame, or something that has a pattern of improvement over a certain time frame. And we support those two pieces of analysis in the Unisearch tool. So let's talk about movers and shakers versus high flyers. When we look at those behaviors of sectors, industries, and even stocks, right? The Unisearch tool and our trends and delta operators are what help us characterize the behaviors we're looking for. And ultimately, when you're in the Unisearch tool, you're trying to identify certain behaviors, right? So we think of trends as a pattern recognition. We use nominal values or going higher or going lower with a plus minus sign. Delta is the amount of change expressed in percentage values. So if it's higher year over year, it's greater than 0. But I could also say that over the last year, whatever I'm looking at, price had to be up more than 10%. So I've got a bit of flexibility in there. So let's take a look at how the tool lets us work. So remember, the high flyers are simply, the highest RT value is the highest flying sector or industry at the given time. I suppose even stock is true too. If you sorted it by RT, that'd be the highest momentum stock at the top of the list. So the operators come into play here in our parameter window. So if I go to stocks, I'm just going to start with price volume because it's easiest to appreciate. Price volume, shares split adjusted. Here are the two operators. We come down this list and we can look for trends. So this is the pattern recognition piece. And when I click in value, I can look for price that's higher over the past 1, 2, 3, 4, or 5 minutes, the last day, 2 days, 3 days, 4 days, 5 days, weeks. And when you go weekly, this is Friday to Friday, by the way. Moving lower in those various time frames, or if I go to custom, I can specify my own. So let's do a little thought experiment here. I'm looking at daily intervals here. So I'm looking for price that has gone up. Oops, sorry. The plus sign over the last 2 days. Right now, this will be closing prices. So how much does that help me? Well, it's directionally correct, but it doesn't tell me how much it moved. Right? So these stocks all went up over the last 2 days. And I'm going to be really surprised to find there's a bunch of contra ETFs, right? But if I graphed all those guys, you're going to see price went up over the last 2 days. They should have green candles on the hard right edge. Okay. That can be helpful. I can do the same thing on week over week, right? As I come in here, I have all those variables that I can play with, or I can look at minutes, days, and weeks. And this is simply movement. I can also say that, yesterday the stock's price was maybe greater than $5, and today the price is greater than $10. Wonder if I'll even get anything. Sure did. So I got big price changes, right? So if I take a look at their graphs, a different way of expressing that price advance, right? So you saw there were a couple red candles, which means the price was higher over the last 2 days, but it wasn't necessarily 2 up days. I could also just say, well, you know what? I'm looking for stocks that have gone higher in price. Let me change this back. They've gone higher in price over the last 2 days, which remember, the custom value is just 2 plus signs. I could also say, I could express the same idea differently, saying stocks, price, volume, split adjusted, it's right at the top, Todd, had a percentage change now, delta, over the last 2 days that was greater than 0, which just means the price went up. Same idea, but now I haven't specified whether or not the last 2 days were up and down or both up, right? It's kind of like the other pattern that we did, but this wouldn't limit us to price. It would include everything that made that change over the last 2 days. Price went higher. And notice that search result can also be modified to say, well, I want stocks over the last 2 days that went up more than 10%. Remember, this is just yesterday's price action, not the delta. Here's the delta. So I can apply these trends and these deltas to stocks, industries, and sectors. So where this is helpful is that I can look for stocks or industries or sectors that not only have high RT values, for instance, but are also continuing to move higher. So for instance, let's do this. I'll show you this so you can start building this idea. Go over here to the Delta searches piece, and let's just look for, I'll do sectors. It's going to be a shorter list. So I'm looking for the last 10 days of price change. So here I'm looking for the sector price over the last 10 days, sorted descending, meaning bring me the biggest changes to the top of the list. And I'll run the search. So here are the sectors that over the last 10 days, in this case, remember they were all down. So at the top of the list is the lowest delta, even though it's negative. Everything has been down. And that in itself can kind of be interesting, helpful, right? So if I was looking for shorting candidates, I would change my sort here to ascending. Here are the sectors that have fallen in price the most over the last 10 days. I can also add a second interval. So let's go sectors price. Not only have they fallen the most over the last 10 days, it's a continuation of the negative movement for the last 20 days. I'm still sorted by the 10-day decline, right? But now I get a feel for the sectors that have been in decline over a 20-day period. Right? There's the 20-day movement, and they're continuing to fall today. So that addition, this idea of continuation, kind of like Rick's idea of follow through here, is not only have these guys been in decline, but they're in continued decline. And yes, I could ride another 2-day or a 1-day delta and do multiple layers if you want. Right? But if electronics has been the biggest mover to the downside in a continuation pattern, I can go look for stocks in that business sector sorted by VST ascending and find some good shorting candidates. Make sense? And again, look at all the buy ratings or lack thereof. So this interplay of delta and trend can really be helpful in identifying stocks, industries, and sectors that are persistently moving in the direction of the market. They're also very good at helping us identify turning points. So let's take a look at some of the canned searches that are in here that'll help us with some of these. Let's start with the turning points because that's a nice setup for kind of where we are in the market, right? So if I go down here to the trends searches, these are some canned searches just to help express the idea. You can build these, you can add these lines of criteria to whatever search you want. But if we go down to the trends, let's do crossovers. Right, so these are bullish searches. Here's one where RT, we're using our trending identifier, right? Where it moved yesterday, the value was below 1, today it's above, right? So that'd be a crossover up. Of course, I could change that interval to be weeks. Last week, RT was below 1. This week, it's above 1. And I'm returning stocks now, looking at the stocks RT. But I could also look at industries here as well. We'll cover that here in just a minute. All right, so that was an RT crossover. What about industry rank? Industries RT rank was trending from, if this is bullish, maybe I want one that just crossed into, this on a weekly basis. I like that interval a bit. Last week, it was below the industry rank, was outside the top 20, right? Because I'm talking about industries now. So outside the top 20 with industry rank means that the value was actually higher than, greater than 20. And then this past week, it crossed back below 20, right? So now I'm looking for stocks who are in industries that improved their ranking from below 20, the outside 20, into the top 20. Let's see if we find many. If I wanted to identify the industries, all I have to do is change my return from stocks to industries. And boy, it's looking. Still looking. Boy, maybe I broke it. Rick, I think I'm working it too hard. I gotta let it either time out or find something, one of the two. Boy, oh boy. All right, so while it's working on that, if I change the return from stocks, of course, it's looking at 9,000 stocks to find out which ones are in those industries. But I can change the return to, so they're all the stocks, it did find them. And of course, a bunch of them are contra ETFs. But if I just wanted to identify the industries themselves, by the way, it's saying, hey, your secondary sort is by symbol, and you can't do that with an industry. Okay, fine. And hopefully this will run a little faster since there's only 222 industries to look at instead of 9,000 stocks. Right, so what's the implication here? Right now, I'm looking for stocks that just moved up into the top 20 industries. I can also look for stocks that are in industries that came from below the bottom 20 and moved up off the lows, right? That's kind of a bottom fishing idea. And I'm not going to run because this is running so slow that it's going to take up all my time. But hopefully you're getting the concept that I can see what the market is offering, right? So treasury, currency, fixed income, healthcare, nursing homes, utilities, supermarkets, and some financial SPACs are the top leaders that have improved their ranking from outside the top 20 into the top 20. So there's somebody else who's ranked first, second, and third, fifth, sixth, and seventh, 10th, 11th, 12th, 13th, but they're not moving higher, right? These guys are the ones who have improved their position over the past 2 weeks, actually over this week, I suppose, as a signal that they're improving, right? Those others may well have fallen in that week over week time frame. All right, so that's the RT crossover and the RT rank crossover. You're also probably familiar with the new stuff searches like find me new buys or new sells, or right here's new sells. So now you can see this is a pattern of it's daily. So yesterday it wasn't a sell, today it is. I could make that be last month. Or last week, this was a sell. It was not a sell and is today. Or this week. Right, so the interval, the time frame can change. And of course, I'm not talking about doing intraday searches, but you certainly can do that as well. I don't think that fits for most of the folks in the room, but that's the idea. All right, so the other thing I wanted to show you was in the trends, persistent trends. Here are a couple searches that are taking that idea of, hey, here are stocks that over the last 1, 2, 3, 4, 5, 6 days have been buy rated. if it went from buy to hold back to buy, it wouldn't be in here. It had to be a buy every day for the last 6 days. Beeline boppers looks on a weekly basis for stocks that were not a buy, but over the last 3 weeks have been. And so these are all pattern recognitions that we're using on these searches. All right, well, what about the delta searches? Well, of course, up here in the delta searches, we have searches for industries, sectors, and stocks. So we already kind of talked about that. There's those canned searches on delta already for industries, sectors, and stocks. So I go to the stocks page. There's some nice fodder here as well. And in particular, when we look for delta searches on individual stocks, then there are some searches in here that are kind of perpetual favorites, right? So first, explosive EPS stocks. Now I can search for price delta on these guys as well, but I think it's most powerful in my practical application is looking for earnings and earning growth changes over intervals. So explosive EPS stocks looks for earnings to be exploding more than 25% over the last quarter. Fantastic search. Works very well, right? So that's a delta on the earnings, and we didn't specify what the value was. It just had to be greater than 25. It could be, if you made that 0, it'd be just show me earnings that have gone up over the last 13 weeks. For those of us who are successful investors, maybe I want to do earnings that have been greater than 0 so that earnings are higher than they were a year ago. Right, so I can put a couple layers on that before it will air out, is where I was trying to go with this. Once you start getting more than about 10 or so parameters where it's trying to calculate these things. But that gives us a lot of room to play. And here we're looking for deltas on growth, earnings growth, and earnings, right? So both the earnings are improving and their growth rate is improving over that same quarterly basis. So lots of nice delta searches here. One of the ones that I really do like and find it here. What I do is remember what folder it's in. Oh, I know where I'm supposed to be going. Sorry. Cherry picking. We have a lot of nice searches in here where we're looking for stocks that are building trends. Now, sometimes you'll see them, right, where you have a look back period, right? The 10-day on this day was greater than it was higher than the 65-day, right? And that the average volume was trending higher on a week over week basis. So you'll see those kind of buried in there. Rising CI prospects is another one of those trend searches where we're looking for improving CI scores. All right. So this is, we call this top-down investing, where we're looking for either the established high-flying industries and sectors or those that are moving and shaking, particularly at turning points. So one of the things that we'll look for when we get to this next bottom fishing opportunity would be that change, right? And certainly if you're 5 days into the move, run a 5-day delta on the sectors or the industries and find out who's leading off the bottom, because that's where leadership changes. So these become very helpful tools in terms of identifying and measuring who's making the best moves and the biggest moves in the current market condition. And of course, if we continue moving to the downside, then you'll want to look for industries or sectors that are continuing to fall, right? Because the slowing downtrend would be your first indication that they're losing momentum and they're coming closer to the end than they are the beginning. All right. With that, though, I'll wrap it up there. Hopefully that was helpful information for you to find where the market's going. Remember, we don't predict where the market's going. We're identifying what it's doing and just going along with the herd. So, Rick, back to you, my friend.
All right, I'm going to take the screen back here. Thanks so much for that, Todd. Very, very insightful. I love Unisearch, so I love to see all the different things, how flexible it is. One of the best tools in the VectorVest program, in my opinion. So yeah, it looks like a lot of people like that. Great presentation. We're seeing a lot of that in there, Todd. I did have a few questions. I think some of them were answered, but Tim was wondering about the moving average when I was showing the Canadian chart. Some folks were wondering what country, so that was Canada when I was looking at the follow through portion, and it is a 65 simple on the Canadian market timing graph. And
You know, one of the things that I think was interesting about that, Rick, I don't know how easy it would be for you to get back to your market timing slide, you know, where you showed the candlestick pattern, the hammer formation, and coming back up to trend line. One of the biggest concepts that I run into a lot with the folks in our successful investor coaching is this idea of time frame and how it's a reflection of how aggressive you want to be in taking a position. Right? So when you were talking about looking for that follow through, right? The most aggressive.
you want me to get to the follow through slides?
Yeah.
Okay. Now I have the Canadian flag on there.
All right. Give me the trend lines if you would.
You want the downtrend or the uptrend line there too?
Yeah. So, you know, we identified that's a hammer formation, a bullish formation at a higher low, right? So there were good reasons for people to get interested. Well, how interested would you be? Well, if you're an aggressive, certainly a day trader, but even a short-term trader, you're going to be more aggressive to act on that formation than would be a conservative or prudent investor, right? So it's this concept of how much evidence do I need to see? Because ultimately what you're really looking at here is I've got a bounce day, right? The candlestick tells me that buyers came in and lifted price. That's why everybody's starting to get interested. But maybe I need a little bit more evidence before I'm going to get all excited here, right? So let's go ahead a slide or two. So there's your midpoint. Oh, I came back up to retest the midpoint. What do I have though? I have ultimately two up days. Downtrend is under pressure, right? If I looked at on your trend line there, we went to a lower low, lower high, higher low. So downtrend is under pressure. Now I'm just asking myself, how much evidence do I need, right, to be confident that the trend has actually changed and I'm potentially looking at a reversal here? Well, the most prudent of us want to take out that prior swing high and go to higher low, higher high. That's the definition of an uptrend. How much you want to kind of be able to jump that signal depends on how aggressive you are. So breaking the 3185 line, maybe that's you want to be that aggressive, you know, buying it after the third candle formation, but before you took out that prior high. Maybe you want to start entering positions after you break the trend line, but still haven't yet taken out the prior swing high. Right? So this concept of you get to pick your poison, you get to pick how aggressively you want to start entering the market on that potential turn, but you also have the choice of how many positions do you want to take on all at once. and what size are those positions going to be. So you have a lot of flexibility in managing the risk that you're taking on, trying to get in early because that's where the best gains are. But let's bring this forward to the idea of a potential bottom fishing exercise, right? When we finally get to some kind of a capitulation point. Well, as David Paul said, when it's time to buy, you're not going to feel like buying. How much evidence do you need to see that you think the probabilities of this turn extending are in your favor? And then can I enter into that market prudently so that I manage my risk? So those are some of the things, top line things that have you thinking about as you contemplate going bottom fishing, or for this matter, continuing to play to the downside. Well, I'd like to see additional follow through to the downside and the positions I'm going to take. If I'm going to even take bearish positions, I would take them in a risk averse way, right? Because the market's already at bottoming levels. Anyway, I thought that was very powerful in your demonstration. So thanks for that. And I'll stop talking.
Well, not quite yet, Todd. So thanks for that. So I do have a pretty important question from Peter, and I'll hand this one to you while I go through the slides here and get back. So Peter is saying, should you wait for a confirmed up signal in this market now, or is the DEW up sufficient to avoid the dead cat bounce? So key question for him.
Well, my answer would be exactly. So if you're waiting for the confirmed call, you're waiting for more evidence that the uptrend is established, right? The DEW is, first of all, the primary wave has already changed, so the short-term trend is up, but that obviously isn't enough evidence for you yet. We've already been getting green lights and maybe even green light kickers. That's not enough evidence for you yet that you're confident. The DEW has moved up, and you're not sure that that's enough evidence because you're asking the question. And ultimately, the confirmed call then comes, well, okay, now I'm at least thinking about. So when you couch that in the idea of you're not going to feel like buying when it's time to buy, that's why we use the signal to begin with, so that you have some kind of empirical signal to say, hey, dummy, wake up, the market's moving and the best gains are made early on. So if you're going to wait until you feel like buying, then you're going to miss the move. What's helpful, though, is when you manage the risk of the entry, even if it is the dead cat bounce, then you're still only exposing the portfolio to maybe 3, 4, 5% risk that you're wrong, right? If it all tanks and everything stops out, if you've properly sized the portfolio and the positions, then it's not a catastrophic loss. You can build more and more positions, increase the size of those positions up to their maxes as the trend develops and keeps moving higher. But that's why if you think about it, well, why do they offer 6 timing signals, for goodness sake? I only need 1. Well, because we're serving a broader clientele than you, but even if you're trading the later signals, you start seeing the trend develop, coming to you, right? Glenn says that all the time. Let the market come to me. And when it finally triggers my signal, that's when I'll start acting. So do a little study, look at that market timing graph, because every signal whipsaws, right? So there will be times when you get a confirmed up call and then, a week later it reverses. But there are also times when you get a confirmed up call and it runs for 5 years. So, okay. Right? I'm not going to get wrapped up in what I think the market has to do. All I'm trying to do is identify what it's doing and act appropriately. It's the secret sauce.
All right. Well, thanks again, Todd. So you'll see I did, I think it was Stuart mentioned some of the resources already available in VectorVest, and he was mentioning Steve specifically. So I do have some the most recent bottom fishing resources. One of them pretty comprehensive. Actually, I have the wrong date in there. That should be 2024, 4 or 5. Exactly a year ago today was that precision bottom fishing. That was over an hour long. I've got the link there. And then one 3 months ago, prepare to go bottom fishing. That was from back in December, a shorter bottom fishing video. All right, so thought I'd put those in there for the folks out there. And that brings us to, I think you saw the video at the beginning. It looks like VectorVest has a roadshow coming up, a traveling roadshow. And the first stop is in Charlotte, North Carolina, May 1st, 2025. And Todd, I'm just wondering, what are Ryan and Glenn looking at?
That's what I was
Up-
wondering. I'm like,
up
is it a
there?
UFO?
What
What are they spying
looking
here?
at? I don't know if Carol is here or not.
So aspirational.
Yeah, I don't know if Carol is here. I thought, maybe she's singing the song she sang with Glenn in Tampa, Slow Lane. Maybe that's what they're looking at. Anyway, you have this one, first stop in Charlotte, North Carolina. You can see the link. You can go there to see that is www.vectorvest.com/roadshow. If you do go there, you will end up getting to this page. And look, there's Glenn and Ryan walking, talking, like, where are all our fans? Why are we walking around here and nobody's mobbing? Oh, look, here they come. And then look, they go, hey, is that Glenn and Ryan? Not sure. They look so different in real life.
Yeah, that was our NASDAQ trip. And we actually did meet a hot dog vendor who's a client. So we had a lot of fun.
All right, so here you can see all the information for that May 1st event in Charlotte. And this is kind of a two-pronged roadshow here. So all the information in here, you can see the agenda. So I don't know if this is a first, but there's a free general session. All right, you can see all the information for that, meet and greet, welcome, power hour, some of the things they were talking about in the video, unlocking the secrets to financial success, trending Thursday. All right, so live streams there. So the general session is free. There's also an upgrade to the VIP experience you'll see. And what I'm told is the first 10 people, this is the very limited, so the first 10 people that register, that will be it. There will only be 10. Here you can see there's going to be, so this is an exclusive event, 4 to 9 p.m. So there's going to be a VectorVest Shark Tank Sip and Savor with a Napa Valley sommelier, and then Glenn and Ryan's top charting patterns. You can see there's a dinner in there as well. All right, so all the information at that link on this page. So hopefully we will, or Glenn and Ryan will see folks out there. All right, so want to make sure everybody's aware of that. I think that's supposed to be the first stop of many. And so with all of that, we would like to thank everybody out there for joining us. As usual, thanks for spending part of your weekend with us here. Hopefully you found a lot of useful information. And yeah, we'll see what happens in the markets next week, Todd. But for now, folks, if you do have any questions, need any help at any time, never ever hesitate to reach out to Product Support and Training at 1-888-658-7638. You can see, as I've mentioned, the replay will be available pretty much right after the webcast is done on the VectorVest YouTube channel. You've got the support email address down below, as well as Ray's email address for those who would like to submit possible suggestions that they'd like to see in future international forums. All right, but with all that said, that brings us to a close. Thank you once again, folks, and you're welcome to those folks putting thanks in there too. Have a great rest of your weekend. Stay safe and healthy out there, and we'll catch you back in the markets next week. Bye for now, folks.
Hey, VV Nation, I'm Glenn.
And I'm Ryan, and on May 1st, put it on your calendars. By popular demand, we're kicking off the roadshow in Charlotte, North Carolina. Break down what we'll be doing that day.
We're going to do 2 live streams there. We're going to do the Stock Analysis Power Hour, which is going to be done by Ryan. We're also going to be doing Trending Thursday live stream as well, which will be hosted by me. And in the middle, we've got a special presentation.
We've worked very hard for a special presentation titled Unlocking the Secrets to Financial Success. Now, after the business is done, we're going to have some fun with our VIP experience where we rented out the presidential suite in Uptown Charlotte. We're going to have a very own sommelier hosted by Jarvis Vineyards. And on top of that, we are going to go over to Fahrenheit's, a beautiful rooftop restaurant where we'll be able to get to know our subscribers even more. To register, simply go to VectorVest.com/roadshow.